What's up, guys? Mike Navarrete here, breaking down DXY for you guys. So I'm gonna really start it off on a yearly time frame. Huge time frames. As you can see, previously around 2002, you had this massive engulfing candle, no wick, tons of momentum to the downside, pushed, creating new lows. Then we saw another pullback. So here we're really taking a look at structure. Now, 2017. The close of 2017 gave us a bearish engulfing candle once again, potentially giving us sell opportunities again. Now, remember, this is the DXY, so this is giving us the value of the US dollar index. So this plummeting gives a lot of information on the dollar in general, which would be going over the economy, which is essentially predicting another crash. But let's get into this a little bit more. I'm going to slide over to the monthly time frame and give more on the technical standpoint. You can go look at what the dollar index means and what this falling means to the dollar and how that could affect your life. That's 100% on you. Definitely would recommend doing your due diligence on that. So we've been bullish on the monthly time frame. Higher highs here, higher lows here, higher highs over here. Now that we've broke structure, so this massive downfall here. November, December, January plummets here. If you take a look at cryptocurrency markets, take a look at what happens when this falls. Now we've been seeing a pullback once again. This pullback here is showing us gain in strength for the dollar. And this is a necessary pullback. Remember, the market needs to breathe in so it can breathe back out. There's no confirmations giving us sells yet on the monthly time frame, but we are seeing some long wicks. Even though this long wick is bullish, this can keep going. It's still possible. Just because we're getting long wicks in this zone, we have lots of liquidity, that doesn't necessarily mean that we're ready to fall quite yet. So we'll see what keeps happening here. And smaller time frames are obviously going to give us a bit of a heads up on whether the momentum is going to start to shift to the downside. So let's take a look here on the weekly time frame and see what's happening on this time frame. On the weekly time frame, we can see that we have recent breaks the structure to the upside. So when the market closed above this high, this lower high wick, the market needs to close above these wicks. Once we had a bullish close here, now the shift in momentum begun, and now we're waiting for a pullback. We had a pullback back into this zone, this liquidity zone. It'll be a little bit more clear on the daily time frame, but you can see that right here gives you an area of previous resistance, current support. Once we had this pullback, and this is a very minor pullback, however, because there were such strong levels of resistance here, this could really be giving us a push to the upside. When the market fell to this area, we were followed by an engulfing candle, weekly engulfing candle, which is a good confirmation that price can keep rising, but it's not the best. The next weekly candle now gave us another bullish print close. If you average out these four candles, definitely more bullish momentum riding with the trend. This is a weekly time frame, so weekly bullish momentum, weekly candlestick pattern is giving me the indication that we are going to be rising, but this doesn't give me the confirmation that we're going to be entering. Our daily time frame, this is still also bullish. We haven't seen a break in structure yet. We've only kept rising. Market pulled back where we've had previous levels of support. Long-term daily level of support, as you can see here, which would date back quite a bit. We'd have to really follow this back. These levels of support and resistance are found using our disturbance candle theory that is privately taught here with Fund Creations. So you can see the price reject this area and start to make another push to the upside. Couple days ago, we did see a close above this level of resistance, gap up, and then see the fall back down. So we're going to look into smaller time frames to identify whether we're going to keep falling, rising, what's really in store here. And you can see that the momentum has shifted, most to the downside, especially after this wick right here gave us a nice move to the upside, nice little stop hunt before it made its move. And here we'll see an M pattern show up, and then we're seeing this drop. So let's head over to the 4-hour time frame. On this 4-hour time frame, we had the market falling, lower highs, lower lows. Now, to start October, towards the beginning of October, we saw a shift in momentum once again, with these candles closing above our previous lower high. Now we had higher highs. So like I said before, we had a high come up here, pull back down, creating a consolidation zone for us. This wick quickly rose and left this area. You can see this is a long shadow that ended up falling down here, giving us a pin bar. And then if you average out these 3 candles right here, these 4 candles, definitely more bearish momentum, which created the fall to this downside. As you can see here, I have a couple arrows drawn out, indicating where I believe price is going to go. Remember, we're only forecasting reality here. So when this is falling, smaller time frames are giving me indication that I believe we're going to see a small rise before another drop and then get a bigger move. So because we're in a 4-hour time frame, because we created a higher high, this is our initial pullback. This is my first pullback before I get an extension. Since my 4-hour is bullish and my daily is bullish, I'm expecting to get impulse, correction, another impulse, one more correction, and the third impulse. So this is ultimately going to be the first correction to give us another impulse. Now we're in another liquidity zone right here, and you can see we had some consolidation before we saw a break above, pull back, and the move. So our 1-hour time frame is going to give us better understanding of where the market's going to go. We were bullish in the 1-hour, then we closed beneath this previous low. I want to see a decent pullback before we start falling again. So this is the first move, because here's where we're bearish. Now we're expecting a retracement before another extension. Why does it have to be one retracement and one extension? Well, this is a correction. If this is a correction in a 4-hour time frame, that means we only get one impulse, one more correction, another impulse before we get our final move, A, B equals CD pattern. So if this makes the move back into this liquidity zone, then we're seeing a correction, a pullback in between the 50% and 618, which would send the market back between the 50% and 414, which is where my extension would go based on the back testing on these fib level percentages. If this comes to this area, remember, about around 84.40, the price comes there, then we can go back to the 4-hour here and understand that on a 4-hour time frame, that's just a 786 pullback before we get an extension. Whereas extension aligning exactly next to our level of resistance in the past, which is going to be a very key level, which is also resonating around 97. So it's a whole number, psychologically strong. This is the forecast for the DXY. Remember, we're not here to help you make money fast. We're here to help you make money forever. Peace out. This is Quantum Creations.